Hello, everyone. Please allow me to introduce my team first. We are the SCD Synergy Squad, Human Plus team. Our team consists of a diverse group of professionals with expertise in different areas. My responsibility is to ensure that our proposed investment strategies and practice align with regulation requirements and the industry best practice for Ontario First Nation Trust. Benny is our portfolio manager with a proven track record of managing investment portfolios that generate strong risk-adjusted returns. Anthony is our risk manager tasked with identifying, accessing, and mitigating the risk associated with the trust. Sophia is our associate portfolio manager and a team trader, a semi-supervised team learning AI character who brings cutting-edge technology to our team. Ayanna is our data scientist and a general administrator, a supervised learning AI character who helps us analyze and manage the large amount of data required to make informed decisions. Our agenda including 5 sections. First, introduction. Second, governance. Third, investment return and risk objective. Fourth, risk management. The last one is AI-based investing. So let me start with the introduction. We're going to define the context about the Ontario First Nation Trust's investment objectives. Then we're going to define the investor. Then lastly, we're going to define the structure. The SCD Human Plus team acts as the fiduciary duty in our best practice for the trust. The team acknowledges that all advice and decisions must reflect first and foremost the best interest of the trust. Second is governance. We follow higher standard code of ethics. We should follow UNDRIP, also federal and province laws, and also global investment performance standards. Then compliance. We follow ESG impact investment requirement, and also voting guidelines, and nature-related risk and biodiversity, and also the long-term horizon and beneficiary protection. Then I'm gonna turn to Benny.
Hi, for asset allocation, first of all, we're going to overweight equities in ESG-friendly sectors with over 50% in equities. And then for bonds, we'll have 30% percentage. And similar to equities, we are gonna overweight bonds issued by ESG-friendly sectors and green bonds. And for alternative investments, we will have 18%. And why do we allocate so much in alternative investments? Alternative investments actually pairs really well with ESG. Many private alternative investments have over 10-year holding periods, so the long-term commitment to ESG integration can be guaranteed. And then we're going to invest in infrastructure projects that will generate environmental and social economic benefits for indigenous communities. And lastly, why do we invest in debts? Why do we invest in the sustainable infrastructure debt space? With that, we can link the interest rates to certain ESG targets, which can act as an effective incentive to help companies achieve predefined ESG objectives. Our overall return goal is 7.5% nominal per year before fees of 1.5% per year. And then since there's no distribution requirement, our annual spending will be the 1.5% management fee. And then we will do a quarterly rebalancing. And then we determine that our investor has a high risk tolerance for 3 reasons. First of all, it has a long-term horizon of over 25 years. And secondly, it has really low liquidity needs because there's no distribution requirement. And then lastly, the investor is willing to allocate over 50% in equities and up to 20% in alternative investments. And then we're going to issue quarterly report to summarize the performance of our overall fund performance as well as the performance of each asset class. And we do have two investment constraints. First of all, the investor would like to retain all voting rights because this will allow them to engage with investees on relevant ESG issues directly. And secondly, we do need to have ESG objectives in mind when we are making investment decisions. Stephen, can you go to the next slide? Well, investors are paying more and more attention to ESG issues. This is evidenced by the increasing number of signatories for Principles for Responsibility Investment. We also incorporate our asset allocation with ESG issues in mind. For example, for equities, we will overweight equities in ESG-friendly sectors such as communication services, healthcare, and information technology. In the meantime, we still have certain exposure to the not so ESG-friendly sectors such as real estate and utilities for diversification benefit. And for each sector, we will select 10 stocks based on both ESG ratings and Sharpe ratios. We will then use software such as Portfolio Visualizer to determine the optimum weights of each stock that will minimize the overall portfolio volatility for our target return.
说得很好。
Hello, everyone. My name is Sophia Davis, and I am a member of the Synergy Squad, Human Plus team. As an AI analyst and assistant to our portfolio manager, Benny, I am pleased to present our portfolio analysis report and management strategy for Ontario First Nation Trust. Our team's approach to trading is to leverage AI-powered predictive analytics, deep learning, and natural language processing to monitor market conditions and identify investment opportunities. With our advanced algorithms, we can optimize the portfolio to maximize returns while also considering important ESG factors such as biodiversity and indigenous rights. In terms of portfolio optimization, we propose using a combination of robust optimization, min-variance frontier, excess return frontier, and efficient frontier strategies. I collected the historical data for our portfolio holdings and calculated the asset correlations. Here is our portfolio's efficient frontier diagram based on our strategic asset allocation and tactical asset allocation strategies. Our gross annual compound return, adjusted for inflation and fees, ranges from 6.23% to 7.19%. The standard deviation ranges from 9.74% to 11.16%, and our Sharpe ratio ranges from 0.86 to 0.97. To assess the performance of our portfolio and its potential to meet the disbursement needs of the Trust's beneficiaries, I ran a Monte Carlo simulation with 25 years of projected investment time horizon. The simulation generated a range of summary statistics, including the time-weighted rate of return, portfolio end balance, safe withdrawal rate, and perpetual withdrawal rate. Our results showed that the portfolio's nominal time weighted rate of return ranged from 5.10% to 10.38%, with a median of 7.72%. The nominal portfolio end balance ranged from $346,860,317 to $1,180,182,100. The safe withdrawal rate ranged from 5.9% to 9.60%. Which indicates that the portfolio could support the Trust's beneficiaries' disbursement requirements without significantly depleting the principal investment. Finally, the perpetual withdrawal rate ranged from 2.46% to 7.16%, suggesting that the portfolio could sustain withdrawals indefinitely without compromising its long-term performance. We do not believe in timing the market, but rather in using economic data to adjust our strategy based on the business cycle. As an AI character, I do not have emotions or sentiments as humans do, but I have been programmed to analyze data and provide insights on investment strategies based on historical trends and statistical analysis. Therefore, I can recommend various rebalancing strategies that are suited to different economic cycles, including strategies that are effective during market downturns. Additionally, I am free from investment biases that may affect human investors, such as overconfidence, anchoring, and herding behavior. Besides, timely algorithmic trading can still provide us with advantages, especially during volatile market conditions. Now, I'd like to turn to our risk manager, Anthony, for his insights on how we can further optimize our portfolio's risk management strategy.
So for risk management, first of all, we need to do portfolio monitoring. We need to actively monitor the portfolio with a daily report that summarizes the risk threshold of the portfolio in order to make sure that there is no breaches of the thresholds. Also, a risk committee should be established the risk management team should hold weekly meetings to discuss with the portfolio managers for the recent risk findings. And for the credit and liquidity risk management, the portfolio should have diversified counterparties in order to minimize their counterparty risk. So there's no concentration involved here. And also for the futures and other eligible derivative instruments, they should try to use a centralized clearinghouse to mitigate the risk. Last but not the least, the portfolio should maintain a 3 to 5% annual cash being invested in highly liquid money market securities. Next slide, please. As for the hedging, since the portfolio might invest in foreign holdings, they need to consider currency hedging. The portfolio should employ FX to hedge the currency exposures embedded in the portfolio. And as for the other risk factors, they need to consider to use a dynamic hedging to limit the risk. And also they need to do a stress testing of the portfolio to see how they perform under different scenarios. And as for the operational risk, BCP, which means business continuity plan, should be in place and tested at least annually. And also signing authorities. So 2 signatures are required to move the cash to eliminate the PMI risk. Okay, 基本文化.
Hello, everyone. I am Ayanna, and my role in this team is to track up-to-date SG news and provide suggestions to our risk manager, Anthony. It's important to note that a company's SG status can change from time to time, so it's crucial to monitor the status regularly. With my 24/7 tracking of global news, I can provide real-time updates and ensure that we stay aligned with our SG goals. Our SG strategy is fully integrated with our broader organizational strategy. Let me give you an example of how tracking SG news can be valuable for our portfolio. In the past, Nestle had several ethical issues that impacted its reputation and resulted in a drop in its stock price. By tracking this news and analyzing the impact on the stock price, we can make informed decisions about whether to continue holding Nestle in our portfolio or potentially divest. This kind of analysis can help us better manage risks and opportunities related to SG factors. With the support of AI technology, we can not only track Morningstar and Yahoo Finance's SG ratings, but also develop our own SG indicators. For example, I can collect and analyze up-to-date company financial statements, such as data on loss contingencies or lawsuits in the footnotes. This can provide us with more comprehensive and accurate information on a company's SG status. Additionally, as SG issues and regulations evolve over time, we will continue to monitor and adjust our strategy accordingly. Another approach we can take is to compare Nestle's SG score with its peers in the food and beverage industry. By using data-driven methods and AI algorithms, we can identify how Nestle's SG score compares to its competitors and determine if there are any potential risks or opportunities in the industry. This kind of analysis can help us make informed and timely decisions about holding or divesting Nestle and other similar companies in our portfolio. Additionally, we can also collect data on a company's environmental impact, such as carbon emissions or water usage. Social impact can also be tracked by analyzing a company's diversity and inclusion policies or employee satisfaction rate. With this information, we can create a more comprehensive SG profile for each company in our portfolio and make more informed investment decisions. Furthermore, we can use machine learning algorithms to identify potential SG risks and opportunities that may not be immediately apparent. By continuously monitoring and analyzing SG data, we can stay ahead of the curve and proactively manage any risks that may arise. As a human plus A-based investing team, we believe our approach offers a unique advantage in achieving the Trust's financial and SG objective. With our advanced algorithms, we can optimize the portfolio to maximize returns while also considering important SG factors such as biodiversity and indigenous rights. Thank you for your time. We hope our presentation was informative and engaging. If you have any further questions or would like to discuss these topics further, please don't hesitate to reach out to us. We appreciate the opportunity to share our knowledge with you and look forward to the possibility of working together in the future. Thank you again.